the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Warren McCarthy, who's the CEO of Century 21, joins us every Monday. I love this bit because we get essentially the full-time scores of what's happened on the auction scene over the weekend. This is finding out what's happening with the housing market from the coalface. Warren, good evening to you.
Yeah, good evening, John, and that's for sure. You know, the market is certainly kicking along well, and after our two grand finals that we had in the football codes, it's bounced back to normal. The amount of auctions going to market around the country on the weekend topped 2,000. It was 2,017 auctions. And would you believe it, this is the first week that we've had where it's actually exceeded last year's amount. So stock is starting to come to market, and we're seeing a good rally around the various capital cities. In Sydney, you know, it was 82.3% as a clearance rate. Melbourne had 76.7%. Brisbane, who I've been looking at fondly, is 59.4% for its 122 auctions put up. And Adelaide, 78.4%. I think that's magnificent for Adelaide. Perth, 42.1%, not traditionally an auction market, but they still had 22 auctions over the weekend. So we're well and truly up overall compared to last year, where the weighted average for all of the cap cities was only 47%. But last weekend, 77.3 for the whole of the country averaged out.
That's very
good
significant.
Results all round.
Yeah. And as you say, because we've been talking about the percentages, but then it's off the numbers. So you say the numbers now are above last year. So really, we are starting to move.
Starting to move, and the number that I keep referencing week on week is this new listings that are coming to the marketplace. I'm very interested to see that we're going to eventually take over from where we were last year. It's still down about 13% year on year, but it has been improving gradually as we've gone through the last 8 or 9 weeks. So it's a good sign. And look, in the Darlings were inner west of Sydney. They had 54 auctions go up in that little sector of Sydney for a 90.2% clearance rate. That's amazing. And that's sort of going back into the boom conditions that we had a few years back.
But just on that, when we talk about this, we talk about clearance rates, but we're not necessarily talking about booming prices. I suppose it'll become clearer what's happening with prices. I think people are being reasonably realistic, are they?
I think they are. The opportunity exists for them to extend themselves somewhat because of limited supply or choice, but also the fact that they are seeing the opportunity through the banks reducing interest rates, albeit will they? Because the last interest rate drop that we had the Reserve Bank announce only at the start of October hasn't been passed on by the Big Four, and I think that's giving an awful taste in some of the mouths of those buyers that are out there at the moment who are missing out on the opportunity, and of course they can't therefore extend themselves as much as they would probably like to.
Yeah, I know, the Big Fours, the rates for the Big Four are significantly higher than some of the non-bank lenders, and it always intrigues me because I did the shift a few years ago, and I've mentioned it a lot of times on air. Now, for a lot of people, that's a bridge too far, but we've still got most of our people borrowing from the big banks, even though you can get cheaper deals elsewhere.
Well, you can indeed, and my tip or advice there is, firstly, check that you have, with your current bank, any break fees or penalties on your existing loan if you were to cut out of that particular situation. And my view is go and grab a broker and get them to shop around for you because they can do the best deal for you. We sometimes get a bit too lazy on our own financing things and yet let someone like a broker who's a specialist go out and do that for you. But I went and sourced a couple of rates to see what the best rates were, and you're right, they're not the Big Four at all. There was a UBank had 2.84% as their current rate. HSBC, which is a reasonably sized bank, of course, 3.02%. Our friends at Aussie were 3.09%, and Bankwest was the first of, I suppose, a sibling of one of the Big Four at 3.16% as their interest rates at present. So, conditions apply against those, but I'd be shopping around right now, and the old adage is simply ask them to beat what the other banks are offering.
Absolutely.
And there are deals to be had out there.
Yeah, and look, notoriously over the years, people overseas, even people here, have left Tasmania off maps when they've gone and done, big presentations. Yeah. We're not doing that here because tonight, Tasmania. Now, what's the story with real estate in Tasmania? Because, of course, you don't have if you can buy there, you can buy as an investor. You don't have to go and live there. So what's Tasmania looking like?
You know what? It's one of the best performed areas in the past 5 years, and people are starting to wake up to the fact. But it's around about 10 o'clock on the old investment clock at present, so they will want to get on with it if they really want to make an opportunity for themselves. The past year, the rate of improvement down there at Hobart's prices has been 3.8%. Which really is against the grain of all the other cap cities when you consider Sydney and Melbourne were down around about 8 or 9% on that particular same period. And I went and had a bit of a research and thought, why? Well, there's a lot of infrastructure going into the area with hotels and the airport and the tourism, and of course that local economy there in Tasmania is growing considerably. And the question was asked of me, is it starting to cool? And I said, well, not really. I think it's the third month in a row that we've seen growth. 0.5% in the latest monthly figures out from CoreLogic, and some of the areas that they're pinpointing are Launceston, the northeast, and of course the southeast. But the one big opportunity that exists there, John, is that the yields for rental or investment is extraordinarily strong. It's 5.9% at the current market.
Really?
So that's pretty damn good in my book.
Very good, yeah, absolutely. All right, one to think about, and don't miss the boat if you've been thinking about investing in Tasmania. Warren, as always, terrific to talk to you. We'll get the next instalment next Monday. Thank you so much for your time tonight.
Thanks very much, John.